Hello everyone and welcome to the program Business Point on Global Television. My name is Samuel Odi and many thanks for joining us at this time. We'll be looking at the top earners of the second quarter of 2024, and generally we'll be looking at it from the oil sector and as well as other private corporate companies that have been doing so well for this second quarter. And then on today's edition as well, we'll also be looking at the inflation rates, the consumer price index, the measures and the change over the price of 740 goods and services consumed by people for day-to-day living. So most of these inflation rates, a lot of persons complain about how expensive food are, and they are this day-to-day living and activities and things that people tend to eat on a daily. So we are going to get the expenditure and then the statistics as well of all of this. The index weights are based on expenditure of both urban and rural household in the 36 states of the Federation. The most important category in the CSP are food and non-alcoholic beverages, which is at 52% of the total weight. Housing, water, electricity, gas, and other fuel at 17%. Clothing and footwear at 8%. Transportation accounts for 7%, and furnishing and household equipment maintenance for 5%. Others include education, which is at 4%, health, which is at 3%, miscellaneous goods and services at 2%, restaurant and hotels at 1%, alcoholic beverages, tobacco and cola at 1%, recreation and culture also at 1%, and also communication is also as well as 1%. So we all know that our current inflation rate is at 32.34%, which is of high from from all the way from 1996. We've not experienced such increments. We've experienced an increment of 13.62% from 1996 until 2024, reaching an all-time high of 47.56% in January of 1996 and a record low of minus 2.49% in January of 2000. This information reached us. Nigerian inflation rates actually value historical data, forecast charts, statistics, and economics calendar and news. Nigerian inflation rates data, historical chart, forecast, and calendar of release was last updated, a few days ago. So inflation rate in Nigeria now currently is at 34.19%, which is last that we recorded from June. And then from 33 to 95% in May of 2024, inflation rate in Nigeria is expected to be at 30.00% by the end of the quarter, according to the Trading Economic Global Micro Model and Analytics expectation. In the long term, the Nigerian inflation rate is projected to turn around to 20.00% in 2025 and 17.00% in 2026, according to the model. So this is on a lighter note that we see, despite what is happening and what Mr. President has said. He said the pain Nigerians are going through at this time is more like a pain of a woman in labor trying to give birth. So when we give birth, joy comes forth. So we are hoping to see that our inflation rate drops drastically to these numbers. But on today's edition, I'm not alone. I have a guest who is joining me virtually, and then his name is John, a business analyst. His name is John, who is joining me virtually at this time. Good morning, sir. Are you there? Can you hear me? I think we'll be going on a very, very quick break, and then when we come back, I'll be introducing my guests to you again. Please do stay with us. Okay, before we go on that quick break, my producer said I should go ahead. So, we have top earners of the second quarter, and then we're going to be looking at it from the oil sector, and then we'll be starting from the number one on the list, which is ExxonMobil, announced their industrial leading score quarter earning with 92.2 billion. Yes, we will continue, which earned them at $9.2 billion profit, showcasing the strength of ExxonMobil and its improved earning powers. By then, this is better than their first quarter earning, which was 8.2 billion. At this point now, I think I'll be introducing my guest, who is a business analyst, Mr. John. Hello, good morning. Can you hear me? Okay, please, I will need to go on a quick break, and then when we come back, Business Point continues.
every government and introduction of new policies, businesses of all kinds and sizes seize the opportunity to evolve and redefine themselves. Business Point on Global Television is where we follow the money and put the facts and figures right in front of you. Watch Business Point every Monday through Friday at 11 a.m. as Kikelamo Okeri tracks all the latest developments across critical sectors. Business Point, this is business. With every government and introduction of new policies, businesses of all kinds and sizes seize the opportunity to evolve and redefine themselves. Business Point on Global Television is where we follow the money and put the facts and figures right in front of you. Watch Business Point every Monday through Friday at 11 a.m. as Kikelamo Okeri tracks all the latest developments across critical sectors. Business Point, this is business.
Global Television is people's television. It's for the people. They focus on the contents of deliverables.
Global Television, channel 365 on your DSTV, the station to watch for your news and current affairs. Hey!
This is Global Television, channel 365 on DSTV, the station to watch for your news and current affairs.
This is Global Television, channel 365 on DSTV, a station to watch for current affairs and other societal news. Keep watching live.
Watching Global TV on DSTV channel 365, where don't touch it now, just watch.
This is Global TV. Keep watching on channel 365 on DSTV station and listening to the latest updates. Yay!
This is Global Television on DSTV, channel 365. Keep watching. Yay!
Many thanks for staying with us. If you're just joining, this is Business Point on Global Television. I am Samuel Odi. Before we went on that quick break, we are looking at the top earners, and then we're starting from the oil sector. And leading, as always, ExxonMobil, who earned $9.2 billion, showcasing the strength of ExxonMobil and their improved earning powers. By this, it shows that their earning powers, increased by $1 billion as that from the earnings they had in the first quarter of the year 2024. Moving on, we'll be talking about EOG Resource. It's a leading oil and natural gas exploration and production company. It is well placed to capitalize on the promising businesses scenarios. It has many on drilling premium locations, resulting in a brighter production outlook. And at this point now, we'll be extracting more on the inflation rate and as well be deliberating on the top earners of the second quarter of 2024. I'll be doing that with my guest at this time, who's John Ochanya, who is a business analyst. Good morning, sir. Thank you for joining us on the program.
Good morning. First and foremost, apology for the network data.
Okay. Thank you so much. So now, we're looking at the top earners of the second quarter of 2024, and we're having ExxonMobil, who is actually leading the pack with $9.2 billion, which is different from what they earned in the first quarter. What's your reaction to ExxonMobil always coming out and then doing better for themselves and leading the pack in terms of top earners?
Please, can you hear you?
Did you hear me? What's your reaction to ExxonMobil leading the pack of top earners in the oil sector?
Okay, basically, we're looking at the index, and being the top owner is a plus on their part. Basically, with what they have done, I think they need to do more, because the plus was not much as that. And in the long run, in the third quarter that we are in now, they're supposed to add more value to the system of the index.
You said the margin is actually an increase of $1 billion compared to what they earned in the first quarter. But let's move away a little bit from that for a minute and then talk about the current inflation rates, and then how the segments that has been having different percentage, and then what you think if some attentions are not being paid to the actual sector. Looking at the day-to-day living of Nigerians, we're looking at, beverages and food, non-alcoholic, basically, is at 52% of the total weight of the current inflation, which is at 34% at this point. And then we're having, as well as housing, which is at 17% at this point. So we're just wondering, health itself is lesser at 3%. So I'm just wondering, what do you think is your reaction? How would we come out from all of this inflation and then maybe have a better
Thank you very much.
Inflation rates in the coming future? Because we're looking from 2025 that is set to drop down to like 20.00%.
Thank you very much for the privilege and the opportunity given to me to dissect, to talk much about inflation. Sometimes when we talk about coming down in 2025, is just a forecast. A forecast is not a determinant of the future reactions of how the KPG will be able to come down from the directions of how the forecast is given. And then there can be a change in the future, and that change can hamper. So let us talk about the reality now, which is at the moment, Nigeria are really going through, because the purchasing power is low in the economic which we are in now. And it is of the importance, based on what you have said in the number that have features by the MBS. When you look at the inflationary measures in the economy, the major aspects that the general inflationary measure of 34 point something percent is not even the right information, but we are going to work, because they are the people who have the statutory obligations of giving us a data concerning the index as it is right now. But when you look, who is the major things that we need to look about, because average Nigerian need to put food on their table. If you cannot buy stationery, you will be able to manage with it and have other measure. If you cannot buy television or other electronics devices, you can have patience enough. When you're able to raise money to do that, you can as well do that. But when you talk about stomach infrastructure is one of the difficult things that average Nigeria cannot live without it. And when you look at the food inflation as it is right now, it's about 42.1%, hovering about that. So it is a high time for the government to come into the reality, instead of beating around the bush, rubbing pot to it cannot work. Because if you look at Nigeria as it is today, go to the market, the common man cannot afford to buy food, because 9 costs of rice is 3,000 naira. A bag of rice is about 70 to 75 to 80,000, depending on the location you are buying it from. And when you look at all that, you realize that the purchasing power is low, that average Nigeria now is living below at par, which is living below 0.0001. So, and the government is telling you that they are trying their best, they are doing this to cushion the effect. But when you look at the effect that is leveraging on the citizens of the country, you realize that yes, we are below the mark, which the inflation that is gulping. Because as it is right now, I will tell you for a fact that we are on a hyperinflation, because you look at the government on one side is trying to raise money and tie the economy from all strata. You can look at the percentage rate of the CBN monetary policy on interest rate is on 30%. And if you look at the fiscal policy, taxes are being raised perspective. And when you look at it, then there is a need for government to do overhaul in the systems of the economy to ensure that all things are being put together to ensure average Nigeria, which is the lower cadre, will be able to have access and put food on their table.
Yeah, Mr. John, as a business analyst that you are, so what do you think can be done differently to cushion the current inflation rates? It's been projected, and obviously it's a forecast that is going to go down to like 20.00% in 2025. But do you see that being achievable before 2025?
With the policy, with the different policies that we have witnessed over time, I will tell you for a fact it's not achievable. Because when the policymaker and those who are saddled with the responsibility have not really worked on the templates on how the inflations will go down. Because if you look at the unifications of the dollar, it has no effects on the foreign investment. So, because the trust of the investors from the foreign countries are still on a bit, and with that, we need to look inward. And look inward, you have to look at your population. You have to cut some certain time and come up with a monetary policy that will really effect a change in a real time, which is reducing instead of increasing the interest rate. They have to reduce so that we will be able to have access to more money and put into our informal businesses that we have. Because if you look at the business that is thriving in the country right now, it is the formal businesses that have made them for themselves, and the resources they have in the foreign exchange and with the local currency, they can submerge it and be able to strive. If person like Dangote, who is a conglomerate, who is an entrepreneur, who have invested in so many company and then into production, is still crying that the interest rate is high, you should know about some informal business, woman that is selling beans cake, woman that is selling just minor businesses in the market who are packed up now, because when they go to the market, they can't have their capital cannot have access to some certain goods that they will have a profit in return. Because the essence of a business in every society, the maximization of profit and maximization of other profits is very, very important. And when you trade and you don't make profit, what's important it is. And then we keep increasing tax. Government is holding us from the tax aspect. And then the government is also holding us on the increase in the tax rate. For instance now, if you are doing a small business, like you want to borrow money from the bank, which if you borrow 1 million, for instance, and then you have to pay 3.3 million. As it is right now with the new interest rate, you are going to borrow 1 million to pay like 657, which means it is not healthy for the borrower to go for the loan advances to put into the business. Meaning the little you have before as a borrower, then bank will in the other way will plug it back to the system, because CBN now will put pressures on the commercial banks and the development bank or the microfinance bank now bring down money, because once there is effect in change in the interest rate, automatically the change is done automatically with those who have existing loan and then trying to also access more loan. So with that, you cannot achieve that which you are thinking to achieve. So the economy now has become so flaccid. Because of the flaccidity in nature, everybody is tied down as if they are like that for you to have a needed result. Because when you tie an economy in terms of raising money,
what now can be the solution for us to come out from all of this? Because these are like, hiccups and challenges that is facing and ravaging not just the business sector, but the country at large. So what's the solution now? What direction do you think the policy makers now should take to be able to resolve and cut down this current inflation rate?
There are three basic things that you could do to cut down the inflationary measure. One, you have to open embargo placed on the importations of goods, since you cannot produce a goods that is demanded within the country, so that you can balance the scale. So the foreign goods imported to the country can balance the productions within the country. For instance, now, if the embargo is released on the imported goods, the other country will import, we export goods from their own country, not necessarily we using our own currency to import goods. It will complement that. Then we have to reduce the tax the government placed on Nigeria to raise more funds for the country, and ask they look up to the foreign direct investment, so that they will command foreign direct investment to come into the country, so that we have more dollars in the economy.
Yes. All right. Thank you, Mr. Jones, for taking our time to join us on today's program of Business Points. And we really, really appreciate your depth analysis and then the way forward to go. We are running out of time, but we would definitely, come back and still have more of this conversation as the figures and the rates continues to change and hopefully changes for the better. Thank you so much, Mr. Jones, for joining us on today's edition of the program.
You're welcome.
Yes. So we'll be giving you a quick recap of the top earners now, looking at away from the oil sector, which at this point now they are leading the top earners now in private and other digital sectors now. The leading starts with a Meta platform. Yes, Meta platform, expected growth for the Facebook parent company advertising businesses with a revenue of $39.07 billion and the earning per share of $5.6. Then Goldman Sachs reports that the net revenue of $12.73 billion and the net earning of $3.04 billion for the second quarter ended in the month of June, with a diluted earning of a common share EPS of $8.62. Then Apple International posted quarterly revenue of $85.8 billion, up by 5% yearly over year, and quarterly earning per diluted shares of $1.40, up 11% year over year for its fiscal 2024 third quarter ended June 29th. And that's how much time will permit us to bring to you today on Business Points. I am Samuel Odi. You have a great day ahead. Bye for now.